everyone, you've tuned into Business Today and I'm Akanksha. Cryptocurrency markets are crashing. Majority top tokens are all down in double digits. While Bitcoin is below support levels and is now trading below $30,000, this is not the only cause of concern of KYC compliant exchanges in India. The 30% tax on gains plus 1% TDS, along with that suspension of UPI and MobiKwik, has caused a steep dip in trading volumes across all these exchanges. And this has prompted the exchanges to move to greener pastures. The top three Indian exchanges by trading volume have started diversifying their operations. CoinDCX has launched CoinDCX Ventures to start investing in Web3 startups, whereas CoinSwitch Kuber has started expanding towards equity markets and mutual funds. And WazirX founders have moved their base to Dubai and are now focusing on other projects. Does this mean that this is the end of the shining crypto story in India? Crypto expert Kashiv Raja joins us today, and he would be sharing his insights on the current situation. Thank you so much for joining us, sir.
Yeah, thank you, Voka, for inviting me.
So, let's just dive into the questions. In light of the recent events, do you think that this is the end of India's shining crypto story? What do you think that the future holds for the Indian crypto exchanges?
Well, I will not say that it's an end to the shining crypto story, because I think the crypto story has not even begun in India. I think all I can say is that the speed of that, crypto train, of that crypto bullet train, that has come down. So it was, say, suppose, running at a speed of, say, 500 kilometers per hour. That speed has come down to, say, 200 kilometers per hour, right? So obviously the charm, the incentive to enter into this industry has gone a little down, both on the institutional and on the retail front as well. Now, on the institution side, if you say the startups, those, we saw that in 2017-18, there were a lot of exchanges, they popped up during that, during that initial days. But now, it is very difficult for any newcomer to start an exchange, given the scenario at present. Obviously, the compliance cost has also grown, because the exchange has to maintain all those datas and all those, the KYCs and all those transaction data and all that. But after, say, suppose after 1% TDS that will get implemented soon, and all these tax reports and everything, the compliance cost has also gone up. And on the other side, the interest from the retail segment has dropped. Obviously, for people who are entering into this industry earlier, there was no provision of flat tax, but at this very moment there is definitely, people are now evaluating the stock market and the crypto market. Now they say, okay, in stocks we do not have a flat income tax rate, and we do not have this 1% TDS getting implemented there. I am better off investing in stocks rather than to get into crypto, because now crypto is no more lucrative. So only those people are entering into this space now and going forward who are coming in for technology and for a very long-term perspective. So the numbers will definitely, there is a break on the number. So I will say that the story has not died. Story will continue to evolve, but the brakes have been put on that crypto train, and you will see a slow speed from here on.
Okay, sir. So from what I'm gathering is that maybe the developments are not going to stop completely, but they'll be slow from this time ahead. What do the recent developments mean for the people who are investing in crypto from India? Because mostly these people use these exchanges which are based out of India, like CoinDCX, be it CoinSwitch Kuber. Now, what are these recent developments going to mean for these people?
Yeah. So, Akanksha, first we need to understand that all these exchanges, who are operating in India, are basically, when we say Indian exchanges, so all these are, the founders are of Indian origin, except, say, WazirX, that was started by Nischal, but then it was later taken over by Binance. So it's a Binance entity. Other than that, other exchanges have founders of Indian origin, like CoinDCX, BitBNS, or other exchanges as well, for that matter. And all these exchanges are based in foreign locations, but since they are operating in India, they are following all the compliances and guidelines that are, that they need to maintain as per the Indian laws, right? Now, what is going to happen is that, since now these exchanges, when they are operating, these exchanges have scaled up quite, quite fast. In the recent, we have seen that in the past, every exchange is now an employee of close to 300 people. Some exchanges have employees of close to 350, 400 people. Now, since the fixed cost is there, and the industry is now will now become a little sluggish, it'll run on a very slow pace. Now, obviously, all these exchanges will try and figure out, okay, what are the ways to generate additional, revenue for them, for themselves. And as you rightly said, the like CoinSwitch, Kuber is trying to explore the area of equities. CoinDCX is exploring, Web3 space, where they have announced this venture called CoinDCX Ventures, like that will invest in Web3 ecosystem. And similarly, other exchanges are exploring different ways. Some exchanges are also entering into new markets as well, and they were already there, but the focus was not there. But now they'll have additional focus on the different new markets. Now, that is the reason what I'm saying, that there is going to be entry barrier now. Not many people are going to enter into crypto exchange business, because it is no more lucrative for them, and the compliance cost has gone down. And also from the retail segment, as I said, earlier there was this thing like, okay, I'm going to make money, because most of the people, when they enter into crypto, they don't enter for technology. They learn technology later. First, they enter into it to diversify their portfolio, to generate more, income from growing industry. So I think that what we will see today is that the industry will get mature as we proceed, and exchanges will try to generate more revenue from alternative sources.
Okay, sir. So you're saying that exchanges are diversifying because of the less incentive they're getting, focusing just on crypto in India.
Yeah.
And that is how it's going to be in the future. Now, sir, talking about the recent market crash, like we started, that Bitcoin is below support levels and all major top tokens have dropped in double digits. What would be your advice for investors? What should they do in this moment?
Yeah, so I generally don't give financial advice, but since there is definitely a panic in the market, and this is also not a financial advice what I'm saying right now. I always advise people when they enter into this space, why they are entering into this space. The first notion is that they want to make money here. Like they want to grow their money faster than inflation, right? They want to beat inflation, right? And so first, when they enter into this space, they enter into this space by listening to the stories from their friends or family members that, okay, fine, they are making money, let me also make money. But they forget that if people are making money, or if some people have made money, they have taken substantial risks. uh, why I say that people forget to evaluate the risk associated with this industry. This industry is still in a very nascent stage. The technology is in a very nascent stage. The risks are real, right? And people do not put in that much of time in crypto to understand crypto, in comparison to the kind of research they do when they trade in stocks. When they trade in stocks, there is a complete different different behavioral mindset. But when they enter into crypto, they have a different mindset. They do not put in that much of an effort or time to understand crypto. I don't know why that happens, but this is a brutal truth, that the people, when they enter into crypto, they enter into crypto with a mindset that, okay, I want to make money, and in a very short span of time. This is not a Ponzi scheme or a gambling table where you are entering. This is a pure technology. Some technologies are evolving, some are in a very early stage, and definitely what we have seen earlier as well, that when internet was evolving, 457 IPOs were there. Not everybody turned out to be a great company later on. 95% of those IPOs and startups failed during that time as well. Today even that holds. The truth is that 95 to 96%, 97% of the Web3 startups are going to fail in the future, right? Why? Because that's the way it is, because most of them are experiments. So people need to figure out, when they are entering into this space, are they coming here for a store of value, that is to invest in Bitcoin, or are they coming here to invest in an experiment that has proved with time, like Ethereum, or are they coming here for taking a huge risk, or investing in small caps, investing in technologies that are very nascent? So investors need to be very careful before entering into this space. My humble request to everybody is that this is not a gambling table, and please do not enter into this space if you are not investing time in this market, because this is highly volatile and risks are real.
Okay, sir. So you suggest that the research part needs to be more stronger before investing in cryptocurrencies, and people have to have clear goals as
Yeah.
to what they want. Financial goals need to be clear before investing in cryptocurrencies.
Yeah.
Thank you so much for joining us, sir. This has been a very insightful interaction. I hope we get to talk again about this, and I hope that the markets recover soon.
Thank you very much, Akanksha.
If you like the video, do like, comment, share and subscribe.